Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the magical Monday, the October 26th edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we'll go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, we've got you covered there too. You can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. And, of course, inside our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magical, magnificent, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the indices trading lower. The Dow's down 831, the S&P 84, NASDAQ 100, 275, Russell 46, semis off 71. All of them down about 2.5% to 3% out here. The spot volatility index trading up 17%, $4.79 is the move so far today, trading at 32.34. You know the game plan out here, and that is if there's a spot volatility index that has a one-day rate of change greater than plus 10%. We typically see some type of bounce or bottom on that next. Usually it's within 48 hours. Lately, it's really been within 24 hours out here. So you would want to take a look at. So if you're short, depending on the type of trader you are, and depending on where we close at the end of the day out here, assuming it's similar to something like this, then what you'd be looking for is some type of short-term bottoming signal in the equity futures contract, specifically the ES Mini. So that's what you would be looking for. You've got gold up $1. You got silver down 17 cents. Light sweet crude is getting schnockered a little bit off $1.33, trading out at 38.52. I believe that's trading into a level of support, or maybe just slightly below it. To the upside, leading the charge dollar-wise, it's Mirati Therapeutics up $22, 12%. Quidel Corp, I don't know if that's how you spell it. It's how Stevie pronounced it. I know how you spell it. I don't know how you pronounce it. $14 to the upside. Dunkin' Brands up 15%, $13.55. Some type of potential of taking it public or private out there. To the downside, leading the charge, Carnival Cruise Lines. Can't be. I don't think I've got the right this thing up here. I know I don't. So let me go see point losers. There we go. So we'll get the point losers. Booking Holdings off at $96, a little over 5%. Boston Beer, $63. Google, $55. Mercado Libre, $49. Of course, that's plenty to look at, but I want to look at what you want to look at. So the first request that came in, and this really ties right into getting back to the general markets here. John in the Tiger's Den said, Steve, could the September 2nd high in the S&P 3588 have been a major top as I see it? So let's go take a look at the charts for the S&P 500 out here and look at multiple different time frames. Oh, you got to love Stevie out here. Must not have gotten enough sleep over the weekend. It was pouring rain all weekend. Finally, we get to see the sun. All week, it was really like that out here. But in any event, let's get back to the S&P 500 now. John, to first answer your question out here, what I want to do is just take a peek. Let's start from the larger time frame, which in my case would be yearly, and then look back. So we know that markets can top or bottom with a TD9 count. In this case here, and that pattern, the top would typically form on either bars 8, 9, or the bar following 9. Now, each TD9 count does not necessarily identify a top or bottom. It's one of those things where coulda, woulda, shoulda. Well, we happen to be, this year, 2020, happens to be the year of bar number 9. Stevie likes number 9 because I was born on September 9th out there. But in any event, that's here nor there. So, John, simply from a TD9 count standpoint, as long as price closes above bar number 5, which, well, I assume that will happen, but I don't want to actually make that assumption. But it would have to close above the actual close from 2016, and that would be 2238.83. So let's assume that is going to unfold. You then have a valid TD9 count. We can see prices moving higher, doing less relative energy. Only a problem if there's a bearish reversal candle. Now, we don't have a bearish reversal candle. We don't even have a key reversal session out here in the S&P right now. If we did have a key reversal session, that means that we need to see price close one tick lower than the open for 2020. So the open in 2020 out here is 3244.67. So for it to be a major top, ideally you'd get a signal on the yearly time frame and you would see it close below the actual open of this year. That would then generate a key reversal bar. Now, so that's the potential, and that's on the daily time frame. Let's go ahead and back ourselves up to the quarterly time frame. What patterns do we have out here? Well, on a quarterly basis, the last quarter actually took out the 7th wave move, letter G out there. And you see 2 of them on my screen. And this is, just goes back historically, takes a look at the beginning of those counts. So in this case here, John, you and I would look at that and say, wave number 7 failed. So on a quarterly basis, that type of long term, we've got a bit of a mixed signal out here. At the moment, price is moving higher, doing less relative energy, but we don't have the bearish reversal candle that's required on the quarterly. So in order for there to be a significant top, that's really the one that you're looking at out here, what you would see at the end of December by this year is you would see a close below Stevie's green line. On the quarterly basis, that's currently printing at 3164. So right now I would have to say to you that on the yearly and the quarterly basis, there's potential, but nothing that has proven itself to us right now. We need more information, and that more information probably takes us to around December, to the end of the year, whatever that trading day is. I don't know if it's the 30, it's usually the 31st out there. The markets are usually open. I don't know if that's a weekend or not. So I'm not going to go look at my calendar. On a monthly time frame, what do we know? Well, we know that last month, the month of September, generated a bearish reversal candle. It's called the dark cloud cover. It was also a key reversal session because the prior candle's prior month high and low was exceeded. So that's number one. Number two, you need to be in extended condition. Well, the mere fact that we have the Rhodes momentum indicator signal triggered here, that puts us in an extended condition. And then you just simply need to, for that key reversal, one tick lower than the actual open of the month. Well, we accomplished that. Plus, you got the Japanese bearish reversal candle. On a monthly basis, John, what you did not get, not you, but what the S&P 500 did not generate is a confirmation of a further move lower. Now, when I say that, let me restate that, okay? In order to confirm that Rhodes momentum indicator top, what you need to see is a close below Stevie's green line. That's currently printing at 3290. 3290 is still support. So is there the potential for a top? Absolutely, because on the monthly basis, you've got that nice confirmation. How will you know? You need to see a close below Stevie's green line. Again, currently printed at 3290. Now, we've only been through the yearly, quarterly, and monthly time frame for the S&P 500. So when we get back from this breakout here, we'll go take a look at the weekly and the daily time frame. Each time frame is important in order to be able to understand and answer the question, is it possible that September 2nd was the high in a major top inside the S&P 500? We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow down 867, S&P off 88 points. So we're trying to answer the question for John in the Tiger's Den. Is it possible that the highs that came in September were a major high? And we've taken a look at the yearly, the quarterly, and the monthly so that you've been able to write down some levels to observe should price continue to move lower. That would help answer that question. We're now in the weekly time frame. And in the weekly time frame, we've got a TD9 count top that formed at those September highs. And we know that the TD9 count can be a significant topping and bottoming pattern out here. Right now, on a weekly basis, last week, price tested and rejected Stevie's green line. That's currently printed at 34.28. Trading above a green line says the market remains bullish. Trading below a green line says there's more of a retracement. Trading below a red line becomes very problematic. Right now, it is a green line. Price is trading below it. The week just began, so I don't know where price will end. But if price is going to continue lower and stays below that 34.28 area, then what we're looking at is a pullback to about 31.15 on the weekly basis. 31.15 is the price area where price most recently broke out on a weekly basis. That was the development of that TD9 count. So the weekly says, yes, valid topping signal out here. And now the question is, does it break through key levels of support? Now, with regard to key levels of support at this stage here, and I'll go back and take a look at the daily in a moment. I'm just simply going to slide over here and take a look at the TAS market profiles for the ES Mini, because even though we're switching from the S&P to the ES, these are levels that need to be observed. Price right now is inside its weekly profile. These are the yellow horizontal lines. You're looking at the panel on the very left-hand side out here. So they're the yellow horizontal lines. It's back inside. I don't know where it will close this week. Under the assumption that it closes underneath 34.17, then that opens up the door for a move to 33.38. Now at 33.38, that's about another 30 some odd points or 28 points from where we're trading right now. At 33.38 is where both buyers and sellers believe there's fair value on a weekly or intermediate term time frame out there. I don't know if price will hold that level of support. If price closes below that, then the next level for support would be 32.19. So you've got to get below 32.19, John, the bottom of that weekly profile, in order to suggest an intermediate term time frame change in trend out here. I'll switch from this chart and go over to our four-pronged approach specifically for the ES Mini. Here you've got a view where you can take a look at the daily. This is the ES Mini, so you got the daily profiles in your upper left. You've got the weekly in your upper right. You've got the monthly in your lower left, and you have the quarterly in your lower right. At this stage here, just simply coming back to the larger time frames, the monthly still trading above the top of its box. So it's trading above the 2019 high. It's trading above the monthly profile out here. And price would need to really get below that. Not really need to. It must get below that in order to suggest that that September 2nd, 3rd high was a major high. Otherwise, price just pulling back to levels of support. So these are profile areas, numbers for you to write down on a pad of paper. Now, let's go back to the daily time frame for the S&P 500. And on the daily time frame out here, what do we have? Great question. So I was mentioning what we had. What was the interesting signal from Friday was that was a hammer candle. And when you close below the low of a hammer candle, the expression I like to use is if you're long, you're wrong out here. So at this stage of the game, this would be saying if you're long, you're wrong. I guess go back to your thought process, trap like rats for people that bought at the highs out here. Very likely where price is pulling back to is the 3204-ish area. I'm skipping past 33.26 because that was a breakout level that didn't hold as support. And so I don't have any real reason to believe that it will hold as support now. And so I'm just simply looking to that area that did hold, which would be the 3204 level. Now, this may be an A to B, a larger A to B equals CD to the downside. I can't say that it is or it isn't. I can't draw that in actually on this version of the software. I don't have that tool out here. So even though I mentioned I really won't go into it. So we just have these levels of support that we have to observe. So I'm going to answer your question at least the best way that I can. And the best way that I can answer that is I can't, because I don't have enough information. We need more information on that weekly, on that quarterly, on that monthly time frame. But if you're asking me, should more selling take place at this stage of the game, the answer there is yes. There's no doubt about that when we take a look at the daily time frame as we took a look at those daily profiles. That leaves us to go take a look at, hey, what's going on in the short term out here? And so we'll go take a look at the short term. I'll just switch over to my Ninja Trader 7 because there I can draw in the A to B equals CD patterns out here. But just curious, on a intraday time frame, do we see anything that's going on right now? Because if we don't, that's just simply so that you know and you can prepare and you can anticipate that you would get to lower price. I'm not sure why it's taking so long for my screens to populate, but it is. So now we'll pull them over here. We'll begin with the 30-minute time frame. And we are sticking with the S&P 500. We're just simply, I'm going to try to pull it over here via the ES Mini. So let's expand this out. We're looking for TD Now counts. We're taking a look at wave counts. I've got this in wave number 6. That's letter F that's on my screen. Bar number 7 as far as a TD9 count. And I don't have any kind of Rhodes momentum indicator signal or anything along those lines. So no bottom signal on the 30-minute time frame for the ES Mini. If we take a look at the next higher time frame that Stevie likes to look at, that would be the 60-minute time frame. We're just looking, are there any type of bottoming signals, patterns out here? We've got nothing on the 60-minute time frame. That would suggest that price should continue lower without a bottoming pattern. Doesn't have to, but that's what it would be signaling to us. Let's go to the 2-hour time frame chart here for the ES Mini. Let me just simply update this because price may be moving lower, doing less relative energy, a Rhodes momentum indicator signal. Let me see. I don't know if I've got this set at. No, I don't. No, that pattern is no longer in play out here. So that's not what we're looking at. You don't have any kind of signal of a bottom on a 2-hour time frame. Let's go take a look at that 3-hour time frame, the 5-hour time frame, 300-minute chart. What do we have here? On the 5-hour time frame, price is potentially in wave number 7. That is letter G on my screen. You can also see now the larger A to B equals CD pattern. This one taking us back, actually not to September. This one taking us back to the highs in October. Against the 5-hour time frame. So there's an A to B equals CD. Price is down to a breakout level. That's at 33.76. Its next breakout level is 33.46. So it's got potential, but no signal just yet. This wave number 7 can extend and extend and extend out here. But that's so on the 5-hour time frame, there's potential, but those other intraday time frame charts, no such luck out here. This would suggest to me that where price is targeting is the center of that weekly bearish structured profile in the ES mini. That's a 33.38. So everything right now points to about 33.38 as being a price target. As we take a look at the daily time frame, the daily time frame for the ES mini, whereas there was a hammer candle on the S&P 500, we didn't get that on the ES mini. Instead, what took place on Friday was a move up into Stevie's green line. That oscillator and change line acts as support or resistance for reasons that I don't know. I just know that it does, and that's why we like to use this out here. And price is likely targeting 33.50. 33.50 is the breakout level for the ES mini for its daily time frame. This is Steve Rhodes with TFNN. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 920, S&P down 95 at the moment. And so let me clarify something. There's a question in the Tiger's Den from Beth. Hey, Beth, welcome to the den. Don't think I've seen the name before. So the question was about the ES Mini. And so just in case I misspoke or gave the wrong figure, we're going to go ahead and pull that chart back up. So give me a moment here. The system is acting a little bit slow at this stage here. A lot of stuff must be going through the pipes. So in the ES Mini, what we're looking for here, Beth, is the TD9 breakout level. And I've got that TD9 breakout level at 33.30.50. So you say I said 33.50.50. My apologies. So yeah, 33.30.50 is the TD9 breakout level for the ES Mini. And when instruments trade, they tend to go back when they have a retracement or decline. They tend to go back to their breakout levels. If they get through their breakout levels, close below them, that tells you about a impending change in trend. Tarpon 2 inside the Tigers Den, I wanted to take a look at Microsoft from the long side out here. And as we take a look at Microsoft, here's what we know. Just simply from a profile standpoint, you've got price inside now, a bear structure daily profile. A Tarpon, odds favor that if price closes below 210.94 today, that price will go and test support. That's at 206.86. Doesn't mean that it will stop there, but that would be the next test. If price didn't stop there, then the next test could take it all the way down into the 180, 184 level. That's the bottom of its bullish structured profile. Now, let's not jump to that conclusion here just yet. First, you've got to watch the 206.86 area. And while you're doing that, let me switch over to my other Microsoft charts out here. And what we have on a daily basis out here is we actually have a Gartley sell pattern, and that actually confirmed on October the 14th. I'm going to just pull my other software over because it's drawn in there with a nice shaded in area so that Tarpon and you and everybody can see this. And we've talked about this, that Microsoft had formed a Gartley sell pattern. Now, formed, when I use that terminology out here, formed because it's got an A to B equals CD, which it did, in a downtrending move out here. And so those people looking to sell Microsoft were waiting for a bearish reversal candle, and that formed out. You can see the bearish engulfing candle. Okay, so today we know two things. We're inside the daily profile, and for the last 5 days or 6 days, we've been below Stevie's green line, again suggesting more retracement. So whether the bottom of that box holds or not, I don't know. But again, if it doesn't, well, then what it should set up is at least a move back to its prior lows, which are in the 196 type area, and that's coming from the daily time frame. But I'm going to come over and get my other set of charts out here. This happens to be the Ninja Trader version 8. This has got a number of my tools on it. And here on a quarterly basis, I thought I had the yearly. This is quarterly. I didn't put it on the okay. Well, I'm just going to go with the quarterly. I was interested in the yearly. Doesn't matter. Here on a quarterly base, so the interesting thing is that we can see from a quarterly standpoint that it was back in can't be. It's got to be January. Why does it say February? Weird. It looks like that'd be first quarter, second quarter, third quarter. No, we're in the fourth quarter. Yeah, we're in the fourth quarter. Okay, so you see this TD9 pattern out here. Number 9, was the first quarter, the end of the first quarter. And then last quarter, the one that ended September 30th, closed over the top of that. That tells us about a significant momentum move to the upside. So, John, I pose this to you, too. I know that you believe that September 3rd was a major top out there, and perhaps it was. I just want us, because now I'm seeing this here on a quarterly basis. I'm curious what the yearly chart looks like, and but curiosity just means I just need to punch it up on one of my other screens out here, and we'll figure that out. But if you take a look at when price closes above that TD9 count, just coming back here, when I say back here, I'm going from right to left. I'm just trying to get my cursor here to work properly. As soon as price closed above that bar following bar number 9, or which labeled bar number 1 after the 9th bar out here, strong momentum move. That's what we've seen unfold at this stage of the game. And right now, there's no reason to think that that's still not the case with regard to Microsoft. So longer term picture out here, Microsoft still looks pretty good. Man, what is going on with my system? I'll put on to reboot everything. If we go back and take a look at the monthly time frame, here's what you want to be paying attention to. You do have a valid, on a monthly basis, a valid TD9 and a valid Rhodes momentum indicator top out here. So if Microsoft is going to start getting schnockered down to the downside, price will need to close below 202.34. That's the current monthly oscillator and change line, Stevie's green line out here. On a weekly basis, Microsoft has got a topping pattern. So we already covered the daily. The daily had the Gartley sell. You can see back at the highs in August, September out here inside of Microsoft. I'll assume it was around September 2nd out here. You can see prices moving higher, doing less relative energy. You get the key reversal bear sash candle that formed. We're below Stevie's green line out here. So the first target to the downside becomes its most recent lows. And if things, and those recent lows we covered earlier, if they get below those lows out there, you're looking at about 184. And the daily we've already covered, so there's not much more. So if you're asking, should you be long Microsoft, I wouldn't be long if price closed below 206.86. If you're still long, and we're trading at 208 right now, I wouldn't close it out until I see how price handles that area out there, at least on from the daily time frame. So I hope that helps you out, Tarpon, with regard to Microsoft, providing us with different meanings out here, but very much like the rest of the market. I believe we've got a question that came in by email, so let's get to that. This one coming in from Mike in Sarasota, and Mike wants to take a peek at Apple and Beyond. So let's go take a look at Apple and Beyond Meat. AAPL is the ticker symbol. Market's moving lower. Apple too, but the question is, where's Apple trading to? So it's trading at 113 and change out here. And so what we know with regard to Apple, it generated also a Gartley sell pattern. It did that on October 13th, generated the bearish dark cloud cover candle. Price is trading inside its daily profile as well as inside its weekly profile. And this is suggesting that if price closes well below 113.56, that's the center of its bearish structured weekly profile, Mike, that price could or should make its way down to the 103.80 area. Now, before it gets to 103.80, which is the bottom of its weekly profile, it has to contend with the weekly bullish structured profile between 107 and 109. So the real level of support on a test to the downside is going to be 107 to 109. But will price get down there? Well, let's go take a look at what is it that could potentially stop the price of Apple from getting lower. And that's the following. Price is trading back to a TD9 breakout level, 113.05. But notice how this didn't hold as support before. So therefore, I don't give it as much weight, even though price is trading on it right now. And not that it can't happen, not that it can't act as support. I mean, at one point in time it did. It's just, for me, it's not the real thing. Now, today is going to be bar number 7 of a TD9 count out here. And so this suggests that Apple could be forming a bottom with a TD9 count tomorrow, Wednesday, or Thursday, because the way that that pattern forms, low would need to come in on bars 8, 9, or the bar following 9. So no matter what, you would need to see lower lows, Michael, in order for a TD9 count to happen and identify a bottom. Ideally, if Apple's going to bottom, it would do it it would form that A count near the 107 to 109 level. So that's what's currently going on inside of Apple. And you also want to take a look at Beyond Meat, BYND. So we'll do that when we get back from this breakout here. Steve Rhodes with TFNN. You got the Dow trading down 924 points, the S&P 96. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're taking a look at Beyond Meat right now for Mike in Sarasota. And so as we take a look at it, we can see well below its daily profiles out here. So, and there's a new weekly profile formed out here, Mike. And the support level is, well, it's really between 128.25 and 151.33. Bottom of the box and center, so it's bullish structured profile, and resistance at 189.81. Okay, that's not going to help us enough right here to get a good track on Beyond Meat. So let's pull over my other charts out here, but at least you've got those profile levels. And what we're going to find is that today happens to be the bar following bar number 9 of a TD9 count to the bottom. Now, Beyond Meat, when it topped out here, it was a TD9 count that identified the top. It happened to be, in this case here, bar number 8. Remember, it could be bars 8, 9, or the bar following 9. Well, we happen to be in the bar following 9 to the downside. And we can also see that where price is trading for Beyond Meat, it's still above its TD9 breakout level, which is 159.15. Typically, when a TD9 count forms above a prior breakout level, it's bullish. So you've got to anticipate, just anticipate. I wouldn't take a trade on it just yet, but you can anticipate that there could be a bottom in Beyond Meat. Now, here's the cool thing, Mike, is that we just took a look at the in a quick way. We took a look at the momentum move of the TD9 count, and we were looking at Microsoft, I believe, and it was a quarterly basis. And so, therefore, if tomorrow price begins trading below today's low, whatever today's low ends up being, it tells you about a strong momentum move to the downside. Now, granted, price would also need to close below 159.15 to give you the message that it wants to head lower. It's negated the TD9 count pattern, and it's below its breakout level, and that means that price would then target the next breakout level, and that's at 132.25. So with regard to your trade, the cool thing is you get to sit on your hands and wait to see how tomorrow's action unfolds to assist you with that, or maybe you're going to take some type of action now. But that's what's really going on inside of Beyond Meat on the daily time frame. On the weekly time frame, price is pulled back and it's testing Stevie's green line on a weekly basis. That's the oscillator and change line. But we're so early in the week, really tough to come up with any kind of position. There's not enough trading data to look at the monthly or the quarterly. So that's what we see when we take a look at Beyond Meat out there. Ruby wanted to take a look at the U.S. dollar index. We'll do that. But Ruby, you also mentioned the DAX out here and that it had finished poorly, down by 4% out here. And similar to Beyond Meat, not similar, but like Beyond Meat, today is, Beyond Meat made bar number 9 Friday. Today's the bar following 9. Well, the DAX actually just formed bar number 9 today. Now, remember, with the TD9 count, a bottom or top will typically form on bars 8, 9, or the bar following 9. So it still could be a lower low tomorrow. You can see an A to B equals CD pattern that is in play here, Ruby. That gives you your first price projection level, about 12,032 out here. So over the course of the next couple of days, you could see a bottom. You could see a Gartley buy pattern. Maybe it's a TD9 count. Maybe it's both. I don't know. But absolutely the DAX finishing poorly today, but it does have some potential bottoming signals to be observing and watching for over the next couple of trading sessions, tomorrow and on Wednesday. Of course, Thursday would be important to watch too, especially if it does make a TD9 and it busts through that. That would tell you a strong picture about momentum out there. So that's with regard to the DAX. You wanted to take a look at the U.S. dollar index. So let's go take a look at the December contract here. You're long and strong out here. And with regard to the U.S. dollar index, let me find my other charts out here. So let me pull these up and see what we – oh, geez, did I really do that? I did. That's okay. I'll just do this. Game plan B. So we take a look at the U.S. dollar index. I've got about a 10-minute delay on it. Looks like it's trading around 93.06. I just want to make sure that that's correct. I'm going to do this, pull this back. Just want to make sure because the system was operating slowly. I want to make sure I don't have some kind of data feed problem. So give me a moment here to get this back up. Let me get over to this tab here. And the U.S. dollar index, yeah, 93.07. So, okay, we're trading. So you're long the U.S. dollar. And here's what and I don't have a pattern to go with being long the U.S. dollar. On the other charts, I showed an A to B equals CD pattern. And yes, you've had a nice rally. But, Ruby, what you really need to see is you need to see price close above Stevie's red line, which the U.S. dollar index has not done for 5 trading sessions, today being the 6th trading session. That's at 93.13 is where it's currently printing Stevie's red line, the oscillator unchanged line. So if price could close above that, you'd be in pretty good shape out there. If it doesn't, if it tests and rejects it, and it's really close to, in essence, giving us that signal right now, that's typically bearish. Today would be bar number 6 of a TD9 count. So it says you wouldn't, if that pattern were to identify a bottom. Well, first it has to close below the close of bar number 2, but then secondly says that you wouldn't see that bottoming pattern until probably Thursday or Friday. Now that is the U.S. dollar index. Since the euro is significant from the weighting standpoint inside the U.S. dollar index. We'll take a quick peek at the euro. The euro is really neutral right now. It rejected Stevie's green line, which you would expect, because U.S. dollar index rejected Stevie's red line out here. However, where we didn't have a TD9 breakdown level or a breakout level for support in the U.S. dollar, you can see here the euro trading between support and resistance. It's TD9s. The support level 116.63 and the resistance level 118.82 out here. So this could keep you into that long trade. I would say if the euro closed above 1.1882, the signal would be a breakout to the upside out there. So that would be an area to look at. On a 30-minute time frame, with regard to the U.S. dollar index, its breakout level is at 92.82 out here. Oh, that's a September contract. What are we doing that? Hold on a second here. That didn't make a lot of sense as I was talking, and then I realized what I was looking at. Now, when we take a look at, there we go. Now we've got the correct contract out here, 30-minute time frame chart. I don't have any kind of topping pattern or anything as we speak right now. So maybe the U.S. dollar index is going to, and it needs to get above 93.05, but really just kind of consolidating sideways. So there's not a short-term signal here that says, hey, you need to bail or anything along those lines. If you're looking for short-term support, well, the profile for short-term support would be 92.93, and if you saw a close below that, well, then maybe you want to jettison your position. That would be suggesting to move lower. So that's what the charts are signaling to us when we take a look at the U.S. dollar index. I hope that helps you out. Ruby, with regard to your trades there. Let me take a quick peek, see if there's any other requests that have come in. And the answer is no other requests. So what do we want to do next out here? What do we want to look at next out here? Well, we haven't looked at the usual suspects, gold and silver. And we've only got about 20 seconds. Let me pop over real quickly. I don't think there's really a whole lot going on out here. Gold really has just been trading sideways inside a consolidation of its profile levels. Even though I don't have the profile levels on this chart here, there's nothing more than sideways movement. So there's not really a ton to talk about with regard to gold. Really the same thing in the case of silver. Silver, you get that perspective, I think, maybe by taking a look at the last 4 or 5 weeks out here inside of silver. So that was the weekly time frame chart. So there's not a ton going on in silver. Let me see where the profile levels are real quickly if I can get to this here before the break. Got about 5 seconds. Let me see on silver. We'll be right back, folks. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So gold, as far as gold, it's just trading. You're looking at panel number 2 from the left. That's a December contract. Just trading with inside its daily profiles. Resistance 1922, support at 1862.80. Silver is trading below its profiles, its daily profiles. I had just had to remind myself that price had formed a new profile above price that is bearish. But you can see silver trading into rising trend lines as well out here. Whether those hold or not, I don't know. But we've just got a sideways move. Inside of copper, Dr. Copper formed a brand new profile today, bullish in structure. Price right now sitting on its center at the 308 level. Likely prices headed back to 304. If we take a look at platinum, just while we've got a couple minutes here, just surfing through this. Platinum is trading with inside. Now we're taking a look at the January 2021 contract. It's inside that daily profile. Price likely targeting 845 to 862. If we take a look at palladium out here, come on, switch over. In the case of palladium, it's trading the December contract, trading with inside its profile as well, supported 23.21 out there. Light sweet crude, I'd mentioned a new profile that had formed. The bottom of that profile is 38.60. Price right now trading at 38.47. You see a bunch of rising trend lines out there as well, but light sweet crude trading right back into support. Natural gas, it is the December contract that is now active. That's going to be panel number 2 out here. This too has a brand new profile that is formed, support at 317, resistance at 333 out here. T-bonds, we take a look at treasury bonds. They too have formed a new daily profile, support at 172.04 and resistance at 175.12 out there. Lean hogs has found support at the bottom of its daily profile. That's at 65.69. Resistance is at 68 buckaroonies. Folks, thanks so much for being here on Magical, Magnificent, Marvelous Monday. Stay tuned for 2 more great hours. You've got your favorite polar bear, David White. He's up next. Tom O'Brien to take us home from 3 to 4. And Stevie's son, I'll be back with you tomorrow at 1 p.m. prompt. Have a magical Monday, folks.